got my first credit card.
Wow, but I already have two.
See?
What? Hey, I got my 500th subscriber on YouTube right now.
I have 2000.
5 million subscribers.
What? You know what? I got my first term insurance of 50 lakhs yesterday.
Not bad, but you know what? I already have it for 1 crore.
Mine is 5 crore.
What?
You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in. Hey folks, see Rachana Ranade here and I welcome you all to yet another insightful video. Well, in the pre-bumper, I'm sure you might have been like, was the insurance cover of 5 crores really required or not? But please understand that insurance cover falls into the category of one size doesn't fit all. So whenever we are wanting to calculate an ideal insurance cover for any person, a lot of factors are involved. So in today's video, we are going to try and understand top 5 factors that one must consider before deciding the cover amount. Well, I'm not going to start this video with what is term insurance, what are the different what are the important factors, why should you have it. All these things you already know if you have subscribed to my channel and hit the bell icon. If you have not, just pause the video, do the needful, and then let's proceed. Now let's move on with the first parameter, which is number and age of dependents. Okay. Now, as usual, Chandu and Bandhu have declared themselves as volunteers for our channel. In fact, recently I had received a comment which said that after Rachana, popularity on a popularity scale, at number 2 it is Chandu. क्या बात है? Bandhu is feeling a little bit jealous maybe. We'll give you enough footage, Bandhu, don't worry. Okay. So coming back to our example. Now assume that Chandu has a son who is around 10 years old and has a spouse who is also a homemaker. Okay. We also have Mr. Bandhu who has a 5-year-old son, a 2-year-old daughter, and spouse of a similar age, and she is also a homemaker. Okay. Now, in this case, if I were to ask you that who would require a higher amount of insurance, would it be Chandu or would it be Bandhu? We are talking about a term insurance. I hope everyone understands that term insurance is mainly for income replacement, right? So, in this case, who would require a higher insurance? And the amount would be, and the answer would be Bandhu. Correct. I've also gotten the answer from behind the camera. Kya baat hai? Now, if I were to understand that why Bandhu would require a higher amount of term cover, there are 2 points here. Number 1, number of dependents are more, and number 2, the age is also less for the dependents. So the number of years that these dependents will take to come to a stage where they start earning on their own, these are going to be a higher number of years as compared to the dependent of Chandu. So I hope this point is absolutely clear, right? But now that you know that in Bandhu's case, it will be a higher term cover. Question is how much? So if I were to ascertain the amount, I'll have to use some calculator, and for that we're going to go to a calculator by Ditto. Well, let's understand first for Chandu. Chandu's age is 35. I've taken the details from him before I shot this video. Okay. Assume that he wants the cover only till the age of 60. Okay. His monthly expenses are around 60,000 is what he had told me. He currently doesn't have any outstanding loan. And if I were to just press calculate with these data points, the recommended cover for Chandu is 1.9 crores. It's almost 2 crores. Okay. But if I were to compare this with Bandhu's cover, now here, when I had asked Bandhu what is his monthly expense, it was 80,000. Why? Because he has 2 dependents, and that is the reason why his expenses were on a shade higher side. Okay. Now, keeping all other things constant, if I just hit calculate, his required cover comes out to 2.6 crores. Okay. So there is a gap of almost 0.7 crores with just one fact that the expenses are higher by 20,000 rupees. Why? Because of the number of dependents. Now let's go on to the second point, which is policy tenure. Now let's again take the example of Chandu and on an age scale now. Chandu is currently 35. His son is 10 years old. Now assume that Chandu opts for a policy till the age of 60. So the policy tenure is till Chandu turns 60. So let's see what happens. When Chandu goes to the age of 60, his son would have gone to the age of 35, right? Now in this case, understand that by 35, ideally Chandu's son would have been, he would have found a job somewhere, or maybe he has started his own business, right? And ideally, he should have also settled to some extent financially, right? So till this age it is okay that he needs some financial assistance if Chandu were to die. Now if Chandu would have taken a cover till 70, Chandu's son would have been 45. Now, do you really feel that he needs that money at the age of 45? Ideally, not, because by that time he would have earned sufficient enough, he would have saved sufficient enough, right? So, always remember that term insurance is required only as a means of income replacement. So, in short, the need for Chandu's income as a replacement would be very negligible. Why? Because Chandu's son himself is now pretty much financially independent. Okay, so I hope you have understood this important point, that policy tenure should be ideally up to the age of 60. Let's move on with the third parameter, which is monthly expenses. Now, why is this point important? Because if I were to compare endowment policies versus term plans, I'm sure everyone knows by now that the premiums for term plans are way cheaper as compared to any endowment plan. But even this be so, ideally you should know what are your monthly expenses, and you should ensure that whatever is the money remaining with you after incurring all the expenses, that is sufficient enough to pay your monthly insurance premium. So what you could do is you could just list down all your expenses, be it groceries, be it something like medical costs, child school fees, whatever. You should list this down. You should calculate what is your monthly expense and ensure that you have sufficient money to pay your monthly premium amount. Well, by now, I'm sure you might have understood that the 3 points that we have discussed all are absolutely subjective in nature and will depend on person to person, exactly like the pre-bumper, right? So, if you are still confused that what is the policy that suits you, what is the cover that suits you, if you're not sure how to actually do it by yourself, then the solution is very simple. Just visit the Ditto website. If you see here, they have 7,000 plus reviews and they have a rating of 4.9 stars. The best part is that they have a no spam policy. You can book a 30 minutes free consultation. You can do it in a very simple way. You just click on book a free call. You should click for term insurance. You should know what is, you should just tell them what is your query, hit select time, select the date, and that is, you can also select the time specifically, and when you press confirm, that's how your call will be set up with Ditto. So to book your free call, just check out the links in the description box below. Now let's go on to the fourth important point, which is about loan, or the amount outstanding for the loan, right? So let's take the example of Chandu to explain this point again. Again, we have Chandu, his spouse, their son, and assume they had also bought this nice car, and for that they had taken a loan of 20 lakhs. Now let's assume that Chandu unfortunately passed away. Now the thing is that if you remember the amount of insurance cover that Chandu had, have a look at this. It was 1.9 crore. We had calculated that, right? Now knocking off, I mean, using 20 lakhs rupees out of this 1.9 crores to knock off the car loan, that's going to be a big amount. That's going to be almost 10% of the money received from the insurance company, right? So this could be a little bit burdensome for their family members. So instead of that, what could be a simple point? Just add up this 20 lakhs here. I know that here it mentions that only unsecured loans, but I think we could also take something like a car loan here in consideration. And then if we hit calculate, we can see that the cover is just increased exactly by the same amount of 20 lakhs. So now you can imagine, once they receive 2.1 crores, they know that this extra 20 lakhs was there just to knock off the car loan, so that they can have this car and they can also maintain the same standard of living. Moving on to the final point, it is inflation. Now, why are we discussing about this? Because if you remember, when we calculated Bandhu's cover, his monthly expense was around 80,000. But that is the scenario for today. You can imagine 10 years down the line, is 80,000 going to be the same amount of expense for him? Answer is obviously not. That needs to be inflated year on year, let's say by 5% or 6%, whatever is the case. So, do we need to recalculate the cover every single year? Answer is no, because when you put the amounts in that calculator, you can see such a note that yes, we have inflated the expenses based at 5% inflation rate. So, all in all, what does this tell you? That you need not calculate or recalculate the cover based on inflation, because that is already factored in. Now, coming to the most important part of the video. If you remember, we started off this video with a scene which mentioned that one person had a 50 lakhs insurance and the other had 5 crore insurance. So the question is, really, is a 5 crore rupees insurance required? Well, it all depends on a lot of factors, and all of these factors is what we have discussed in today's video. So the point that I made in the beginning, it's as good as one size doesn't fit all. You have to check for yourself whether the 5 crore cover is really required for you or it's not. Also, remember one more very important point, that whatever cover amount you calculate, say 5 crores, assume that you already have a cover of 3 crore rupees, then now only balance 2 crores fresh cover will be required, right? Also, a very, very important point comes up is that once, let's say, there is a sad demise of the bread earner, of the insured person basically, and that 5 crore rupees is received by the nominee. Question is, what is to be done with that? If you don't know what could be the multiple options, or you're confused whether it should be parking that money in FD, or should it be parked in a mutual fund or stocks, or what, if you want to know my thought process, please let me know in the comment section. I would love to do a separate video on what could be done with the amount received on account of life insurance claim. So I hope you found out value in today's video as well. If you did, don't forget to smash the like button, don't forget to share this video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye bye.